In this video, I will explain what everyone sees when they look at the commodity trading industry, but only the real seasoned commodity traders understand. On the surface, it's true. Commodity trading looks simple, but that's only because you are missing the most important part of the game. So today, I will walk you through a counterintuitive idea that will completely change how you look at this industry. And this idea will also allow you to better understand what type of opportunity are worth chasing for you. Does it make sense for you to chase this copper cathode deal? Why Airbnb type of platform never worked in commodity trading? Which business model actually survived starting with zero capital? And how to allocate your time and reputation intelligently. Because time and reputation are not infinite, guys. If you already started your entrepreneurial journey or your commodity trading journey and you tried to source some deal, to put some deal together, but you felt that something was wrong, you were correct. So let me break it down properly for you. So everybody that starts in this industry as a solo commodity trader or as an entrepreneur kind of always go through the same path. They are from, I don't know, Brazil. So they think, oh, Brazil, we have a lot of sugar, a lot of soybean. So let me try to close some deal about sugar and soybean. Or it's a European kid and they're like, oh, electricity is going to be the new big thing. So what is important for electricity? Copper. Okay, so let me try to close some copper deals. You know, this is usually how it starts. Then they go online, find suppliers. And by the way, guys, finding supplier is easy, you know, you don't even need to move your fat ass out of your mom's basement. Then you try to find a buyer, and this is when you start to think that something is wrong. You are put in multiple WhatsApp group that doesn't really make any sense. You are put on video call with people that doesn't seem to know anything. You try to do LinkedIn outreach, but it doesn't work. You get multitude useless piece of paper called LOI. And finally, when you try to reach out to people that you know trade these products and need this product, like traders and procurement officer from well-known companies, they don't even reply to you. Does it sound familiar to you? You try all of that, but nothing seems to work. And you feel that something is off, and you're completely right. The reason that your gut feeling is right is because discovery is an illusion. Listen to me carefully, because you probably won't understand what I'm going to say, or you most probably don't want to believe what I'm going to say. So be open-minded. I've been doing that for a very long time, all right? Counterparty discovery adds no value in commodity trading, especially when you speak about the big, highly liquid commodity trading market. I know you probably don't want to believe it, but that's true. You looking for counterparties provides no value to nobody. Zero. So let's say that you want to buy copper cathode because you found a Chinese SOE that is willing to issue a LC. SOE means state-owned enterprise, right? A big Chinese company owned by the government. But when you contact Trafigura, Mercuria, Glencore, or even the big producer like Freeport, BHP, nobody answers you. Why do you think nobody replied to you? Why? I try to answer these questions. Why? I mean, because they must be completely right? You have a properly good buyer, a great SOE, willing to open a letter of credit, and they don't want to reply to you. I mean, what is going on? What is going on with those guys? They want to increase their sales, right? Or probably they just hire a bunch of low IQ people. That's also a possibility. I mean, well, I mean, what is going on? Why? Why they don't reply to you? Why? All right, the reason is that you are not bringing them a counterparty. You are just bringing noise. Useless noise. So let me explain something that some people seems to never understand. In highly liquid market, copper, crude oil, sugar, diesel, all right, those big market, counterparties are not scarce. Everybody knows who is buying. They didn't wait for you to discover someone. I mean, they know the market. They know who is buying. But you know what is scarce? Good balance sheet is scarce. Good execution capacity is scarce. Good reputation is scarce. If your Chinese SOE company is a real buyer, right, they probably know this company already. And if they don't transact with them, it means that there is a good reason. So this is the uncomfortable truth. In large liquid market, counterparty discovery adds no value. But what brings value is taking price risk, taking credit risk, absorbing logistic fucked up, financing the cargo, and so on. So this is what brings value, not finding people on Google, not being put into WhatsApp group, not collecting PDF and LOI. All right, this is childish, guy. Okay, this is not how you are going to close a deal. Okay, discovery is an illusion. The game is not about finding counterparties. The game is about becoming a counterparty worth answering. Now that I've explained that, I'm going to contradict myself, okay? But you need to understand the dichotomy. It's true that there is some place in some markets where discovering counterparties adds a little bit of value, like 20% or something like this. So this is true if you go niche. If you go niche, there are still some pocket of value in discovering counterparties. For instance, let's say that you buy a byproduct of a processing unit and you happen to find some buyers that can use this byproduct and get more value than the current usage. Then you can arbitrage it. It's still possible. It's difficult to find, but it's still possible. And by the way, this is what the members of our community does mostly, niche commodity trading. So I understand this could be a bit confusing because 20 years ago, the game was about discovery. But today we live in an age of free communication, free translation. The cost of traveling worldwide is really low. So we are not in the same environment that we were 20 years ago. I would even say like that we were like 10 years ago. All right? The world has completely changed. So now you can better understand why all the startups that tried to disrupt our market with a platform didn't work. All the guys that was going to create a platform for coffee, create a platform for iron ore, create a platform for non-ferrous concentrate, they all failed. They all completely failed. They had to close down or they had to pivot into a techie commodity trading firm, but it was still a commodity trading firm. So if it was not clear what I was saying by platform, so this is what happened. Where there is a bunch of supply, a bunch of demand, and you try to make them meet on a technological platform like Uber, like Airbnb, like eBay, or you have all those type of platforms. So a lot of people try to do that in commodity trading, attacking one market, but it didn't work. And what is funny about the people that started those platforms is like there is two types of people. There was one type that was the Ivy League graduate or big university guys that know how to speak to the VCs to get this sweet money. But they had like no clue about commodity trading and they completely failed. Or the other type was the guy that worked in a commodity trading firm, but didn't really understand what I'm explaining in this video. And again, managed to raise money from VCs and then had to close or pivot the company. So, but there was only like two types. That was funny because the second time, this is usually not the most successful trader, that try to do a startup. It's just like after a while as a trader, you see that this is a difficult job. So you're like, man, is there like any way to make it easier? And everybody at that time tried to like a platform would be a solution, but it doesn't work. Again, because a platform solves for discovery and nobody cares about discovery. There is no value in discovery, right? The value is in de-risking the transaction. But de-risking the transaction is not as easily solved as setting up a platform. So now that you understand that discovery is mostly useless in highly liquid market, and let's assume that like me, you are a brokey, you don't have $1 million to start your commodity trading company, you don't have credit line, you don't have balance sheet, okay? You start with nothing. So the real question became, what business models survive in commodity trading with zero capital? So let me be clear, something that is not a good business model, all right? Let me introduce one buyer and one seller and take 1% commission. This is not a business model, this is hope. Okay? Usually in commodity trading, the models that survive are the ones that absorb the risk and control the flows. But now the question is, hey, Damien, but how do I absorb anything if I don't have capital?
There is a narrow way through.
Yes, there is a narrow way. And this way is called prepayment. Now listen carefully. If you have zero capital, the fastest way to close a deal is to use prepayment. There are other structures that are possible that I teach in our community, but it's way more complex and it's not as fast as getting a prepayment from the buyer. But the thing is, prepayment mostly works in very specific deals. It mostly doesn't work for the large liquid commodities with straightforward flows. So where does actually prepayment work the best? In short, in niches of small to medium size tickets. And usually the product is more an ingredient than a commodity. The buyer really needs the product for whatever reason, The suppliers are often smaller than the buyer. The volume is manageable. So in case of loss on the prepayment, the buyer is not going to go bankrupt. So a good example of those flow would be like regional agri flows usually follow that. Like if you need to ship trucks, like in nearby countries, usually trucks you can ask for prepayment because it's very short times of delivery. Scrap products with very specific grades that you can't find like anywhere. Byproducts from processing plants. Byproducts are usually not the main product that they produce, so they don't really put any thought or effort to better sell those byproducts. Think about it, like if your main products makes you $1,000 per metric ton and the byproducts makes you 10, you don't really care about the 10. As a manager of this plant, you really care about the main product, not the byproduct that doesn't really impact your P&L. Also niche industrial input. If you can supply some chemicals input to small industrial plants, usually this is also very good for a niche product. And to be honest, there is like hundreds and hundreds of markets where it could work, but again, they are niche, so you need to go and do the work of discovering those markets. So here's an example of a niche market from my old days as a dairy commodity trader. I was in charge of West Africa, and in West Africa there were a bunch of countries that has no credit insurance. It means that in those countries there is no credit insurance willing to cover companies there. There were countries like Mali, Niger, Central Africa, and so on. Like really, really tough countries. By the way, maybe it has changed. I don't know. I'm not updated about the situation in those countries now. So what happened in those countries? Like the buyers had to prepare because nobody trusted them with like giving them credit, right? So in those countries, the importers, they know that they have to prepare. Especially the small and medium one, they know that they have to prepare for the cargo. So in those niche geography, prepayment is mandatory. So if you can make it work in those geography, you can have a business with zero capital. All right. So it's really about like looking at niche. If the niche is the product, if the niche is the geography, if the niche is legal. I mean, there's thousands and thousands of niches out there, man. So you just need to find and discover them. So the zero capital model is not glamorous, okay? You will not do huge volume from the get-go. It's a narrow part, but it works as long as you know how to build trust. And how to build trust? So there's a lot of tricks and tactics that I could teach you. But the main idea behind this word trust in commercial exchange is that trust could also use as de-risking. Because think about it, if as a buyer I prepare you to go get me the supply that I need, it means that I trust you that you are not going to run away with the money, that you are going to bring the right quality and the right quantity that I need at the right time. It also means that I hope that you are not going to create like useless headaches by your incompetency or your low knowledge. I mean, some guys are really good at closing deal, but then execution is horrible. So by trusting you, actually, I believe that it's not a risk to deal with you. Okay? So trust is basically another word for de-risking. Think about it. Trust in a commercial context is about de-risking. And this is also the other idea that I want you to understand. When I say, oh, I trust that guy, it means I trust that there is no risk in dealing with that guy. So again, relationship building, it's only a way to de-risk the commercial transaction. All right, guys, so I hope that you liked this video and that you learned something. And if you disagree with me about any point that I made during this video, you can just comment below this video, no problem. But know that I will only accept your point as valid if you've closed more deals than me in your entire life. So if that is the case, say it, and I will maybe think that your point has some weight. Otherwise, silence!